Good morning, everybody. Welcome back to Morning Markets on Wednesday, the 24th of June. A couple of things today. The first of which just builds on the comments yesterday around the purchasing manager indices and the expectation of ongoing improvement there. And that's what we saw when we look at the UK, Europe, and the US continuing to recover from the lows that were encountered as economies entered a very significant lockdown phase. The majority of the indices continue to remain below 50. In these indices, a reading below 50 indicates a contraction in activity month on month, albeit the magnitude of that contraction has significantly declined, so that the improvement that we're seeing is coming through. My colleague Chris Leyland will discuss this in more detail later on today when he'll give a visual representation of this, which I think really brings home the magnitude of the decline, but also the significant improvement that we've seen. If we also then look at other things that we've been discussing as a team this morning, the first of which was then just the ongoing improvement that we've seen in equity markets over the past number of days. We saw post the PMI numbers in the UK and Europe quite positive and materially positive moves for both the FTSE 100 and the Euro Stoxx 50 up over 1% yesterday. Following that through into the US, we had the Nasdaq up 0.7% yesterday, and that led the US indices higher. And I think that's just a point that I wanted to draw out a little bit more. That's Nasdaq at an all-time high. Also within that, we've seen a number of US technology businesses at all-time highs as well. And that's an important point to draw out, and it just builds on something that we touched on over the past number of weeks around that we had been seeing a degree of a broadening out of equity market performance into some of the more economically sensitive sectors. That seems to have paused at this point in time, something that we'll look to see if that continues or if it reasserts itself through that broadening out, which is obviously supportive for equity markets. The other thing that we discussed this morning was just the ongoing strength in the gold price. Typically, the gold price is seen, or gold, I should say, is seen as a hedge against economic uncertainty. And yes, indeed, we do still have that. It's unknown as to how economies will continue to evolve as we emerge from lockdowns and what that means for unemployment, what it means for productivity. So in that sense, gold has continued to trend higher over the past number of days, and indeed it is getting close in dollar terms to an all-time high. In sterling terms, that's already been broached. So it's just interesting from a markets perspective to think about equity markets moving in a positive direction at the same time as gold is moving higher, something that we typically don't see, and they're typically more of an uncorrelated relationship between the two. Other things that we looked at this morning was the expectation survey coming out of Germany around sentiment, and that's the IFO. Historically, that's provided us with a very good indication of future economic direction for the German economy. Remains to be seen whether that continues to hold this time around, given the very significant challenges that the economy faces from COVID-19. Other things, just very briefly, we will get a European Leaders Summit in July in Brussels. This is likely to be the first face-to-face meeting that the EU leaders have had post-lockdown, and I think that's interesting. It's an unscheduled meeting that they're having. I think that indicates a degree of the momentum that's potentially building behind the EU recovery plans that we've discussed a number of times in the past. So again, some evidence of positive momentum there, which will be something that we should continue to observe. And I think this all speaks to another thing that we've been seeing over the past number of days and indeed weeks, is just ongoing weakness in the dollar, strength of the euro relative to the dollar over that period as well. That's it for today. As I said, please look out for a chart of the day from my colleague Chris Leyland. Thank you.